Welcome to this explainer. Today, we're diving straight into a critical clarification in audit methodology. We're going to break down an area where so many capable students, and honestly, even junior professionals, stumble, simply because they conflate two completely distinct concepts. We'll be keeping our focus calm, precise, and entirely grounded in the professional standards, kind of like a senior partner walking you through your first major engagement. So I want you to picture this. Put yourself in a high-stakes environment for a second. You're sitting in a tough exam, or maybe you're across the table from an engagement partner in a conference room, and they look at you and ask, what does audit planning involve? How are you answering that? Well, if your answer involves jumping straight into a laundry list of audit procedures, you have just stepped right into the single most common trap in this area. Seriously, that answer completely collapses two very distinct things that the governing standard deliberately keeps miles apart. Because this structural misunderstanding is so common, examination questions are frequently built specifically to test whether you know the difference. If you just list procedures, you've ultimately scored 0 marks. Okay, let's fix this and look at the authoritative text. Standard on Auditing 300, on Planning and Audit of Financial Statements, strictly requires the auditor to establish an overall audit strategy, and then, and only after that, to develop an audit plan. The overall audit strategy and the audit plan are absolutely not the same document. They answer entirely different questions, and they're intentionally prepared in that specific chronological order. This isn't just some helpful best practice suggestion, it's a legally and practically mandated sequence. But hold up, before we even think about drafting either of those two documents, something else has to happen first. The auditor must perform preliminary engagement activities. This is absolutely foundational. I mean, think about it. There is 0 sense in investing time, money, and professional resources into planning an engagement that the audit firm literally shouldn't even be accepting in the first place. So in the real world, 3 crucial things have to occur before any formal planning initiates. First, we consider the continuance of the client relationship. We have to ask ourselves, should we actually continue doing business with this entity given their current risk profile? Second, we evaluate our compliance with ethical requirements, paying special attention to our independence to make sure there are absolutely no conflicts of interest. And third, we establish the formal terms of the engagement. These 3 preliminary engagement activities come first. Only after these are cleared do we actually move into the planning phase governed by Standard on Auditing 300. Section 1, the Overall Audit Strategy, Scope, Timing, and Direction. Let's get into it. This brings us to the first major pillar of Standard on Auditing 300. We've accepted the engagement, now we have to formulate the overall audit strategy. The main job of the strategy is to set the scope, timing, and direction of the audit. Let's look at what actually goes into building this. First, the auditor determines the characteristics of the engagement that define its scope. Next, they ascertain the reporting objectives. This is totally necessary to plan out the timing of the audit and figure out the required communications, like, say, knowing exactly when the client needs the final report for their board meeting. The auditor also considers the factors that, in their professional judgment, are significant in directing the team's efforts. And finally, taking into account the results of those preliminary activities we just talked about, the strategy decides the nature, timing, and extent of the resources needed to actually get the job done. So, to distill all that technical jargon into plain English, the strategy operates at a high directional level. It's essentially answering your big picture questions. Who's going to do this work? When are they going to do it? With what level of specific expertise? And structurally, where is our overall audit effort going to be concentrated? Moving right along to Section 2, the detailed audit plan, the actual work to be performed. Once the strategy is set the broad direction, we shift gears into the second required document. The detailed audit plan gets into the granular reality of the actual work. It's significantly more detailed than the strategy. It specifically sets out the exact nature, timing, and extent of the risk assessment procedures. It mandates the further audit procedures to be performed at the assertion level, meaning we're zooming down into specific line items and account balances, like exactly how we're going to verify the existence of inventory. And it includes any other procedures required to fully comply with the auditing standards. Notice that specific phrase, nature, timing, and extent. That is the precise standard-mandated vocabulary of the detailed audit plan. So while the strategy asks the who, when, and where the effort goes, the audit plan answers a completely different, highly specific question. What work will actually be done? It's the tangible, boots-on-the-ground list of procedures. This side-by-side right here is the core distinction you absolutely must internalize. The overall audit strategy sets the scope, timing, and direction. It governs the entire audit effort as a whole. The detailed audit plan, completely separately, sets the nature, timing, and extent of specific audit procedures. They're complementary pieces of the same puzzle, sure, but they are entirely distinct. And here's the crucial part about the flow between them. The relationship strictly runs one way. The strategy guides the development of the plan. Think about it logically for a second. An audit plan built without an overarching strategy is really just a random, unjustified list of procedures with absolutely no reasoning behind their allocation. You simply cannot effectively plan the details of the work until you have strategized the broader direction of that work. Section 3, the continuous reality of planning, an iterative process. Now that we've properly untangled the strategy from the plan, we need to cover a few more requirements in Standard on Auditing 300 that pop up in exams way more often than people expect. First is the actual timing and continuity of planning. There is a huge misconception out there that planning is this discrete, one-and-done phase at the start of the audit where you check a box and never look back. That is totally incorrect. Planning is continual and iterative throughout the entire engagement. If you discover something new midway through, say you uncover a previously hidden, super complex legal dispute, guess what? Both the overall audit strategy and the detailed audit plan have to be revised to reflect that new reality. If you see a scenario describing a mid-audit discovery, you can bet it's testing your understanding of this iterative nature. The standard is also super clear about who is responsible for this whole process. The engagement partner and other key members of the team are strictly required to be involved in planning, specifically in the ongoing discussions among the team. So if you're looking at a scenario where planning was completely handed off to junior staff, that firm is failing to meet the standard. The experience and the professional judgment of the partner are mandatory continuous inputs. You can't skip that. The second really nuanced area is documentation. Naturally, the auditor has to formally document the overall strategy and the audit plan, but they also have to meticulously document any significant changes made during the engagement, right alongside the specific reasons for those changes. And honestly, that last point is absolutely vital. In the eyes of the standard, the reasons matter just as much as the change itself. You have to prove exactly why you pivoted your strategy or altered your procedures, because that documentation is exactly what protects the firm during an external regulatory review. So, to wrap this all up, if there is one golden rule you take away from this explainer, the rule that will keep you safe in an examination and effective in real-world practice, it is this. The strategy decides where the audit effort goes, the plan decides what that effort consists of, an answer that gives one when the question asked for the other has answered accurately and scored nothing.